says, you work hard for the money, but is your money working hard for you? Here with tips on how to turn your lazy money into easy earnings is Richard Ringgold. He's actually from Ringgold and Associates. Thank you so much for joining us.
Absolutely. Glad to be here.
Hello there again. You talk a lot about this on your radio show.
I do. It's very important.
You've been doing this a long time, 16 years.
Yeah, I have.
As a certified financial planner.
Exactly right.
Okay, so lazy money. How do you determine which funds are lazy?
Well, first of all, lazy money. You know, it's money that's not invested, or maybe it's in cash or low interest bonds, something like that. It's just not a good idea because you got to fight inflation, especially if you're a retiree. You got really high inflation in healthcare, several percent a year, and then.
So a lot of people think, oh, I just keep the cash because I have the money, but you're really missing out on how that money could be growing a lot.
Right.
Because they're afraid to take the risk.
Yeah. Plus, you know, we're looking at low interest rates or maybe negative interest rates. That's common all over
that's
Europe.
Scary.
And Japan, it's negative, so that's not good. So I think that someone needs to take a look at being invested.
Okay.
A really simple vehicle is something that might make 5, 6, 7%.
Okay.
No possibility of a loss. Just kind of grows, no fees. It's called an equity indexed annuity. Can be a simple little deal. You can get free withdrawals out of there. Typical is 7 to 10%. It's probably all you need.
So that's kind of the situation we're looking at. As someone who, you know, you do need to take that lazy money, make it work for you, but you can't really afford to take a big loss. You don't want to take the big risks.
Exactly. So that's a good step where you can't lose money. Then you can move up the ladder here and maybe get some of the income funds that we have.
Okay.
One is already up 7% this year.
Wow, okay.
But what's really good about that, or notable, is it's tactical in that it has a hedge component to it. So if the market starts to go down, they'll actually make more money.
Oh, really?
And then we have another one that's, again, tactically managed to where if it's actually beat the market since 1998, good track record. If the market starts to go bad, they go to cash.
Right.
So
that's one thing, is that you know when to pull your money out, because it's not always good. Because you talked about something about a horse. If you stay on the horse for too long, but when the horse isn't doing well, you can pull your money out and you actually avoid that downfall. Right.
And then the other way to do it is to go the equity route, which maybe you need a combination of all three. Something safe, simple. Equities will make a little bit more, but again, they're tactically managed to where when it's right to be in the market, they're fully invested.
Right.
And when it's not, they're out. They're in cash or some sort of safe haven.
I gotcha. So what about like health care? There's long-term costs that are coming up for a lot of retirees in the area too. I mean, it's getting expensive.
Yeah, it is. And if you're somebody that's going to be just retiring, let's say you're 65, and you figure you're going to need those healthcare costs down the road, it can be very expensive.
Everybody's living longer too.
Oh yeah, absolutely. I mean, it's over $100,000 a year to be in a nursing home now.
Wow.
So you can imagine later, and it's maybe a 3-year stay, you may need a lot of money. $400,000 or $500,000 wouldn't be out of the question. And
saving for college now, if you have a kid who's getting older, getting up there, I mean, that's more expensive now too. So these are great ways to do that, to make your lazy money work for you.
Yeah, and I just think you need to do it in a way that's sensible, either where you can't have losses or where we're planning to where a loss would be improbable because of the way it's managed.
And that's
in and out of the market at the right time.
Right. That's why professionals like you are really good to help us out, because you're a certified financial planner, but you have people that also work with you that have advanced degrees and they know all these algorithms and mathematics that I am just not even going to.
The good news is I'm not the guy pulling the strings on the investment portfolios. We've got utter professionals that do that.
So what kind of special offer do we got?
Well, if somebody wants to come in and take a look at any financial matter, doesn't matter whether it's Medicare, Social Security, your investments, insurance, whatever, estate planning, happy to give you a complimentary appointment.
Okay.
And no charge, come in and talk about whatever you think you want to talk about, and we'll develop your financial roadmap.
All right, that is certainly the first step, because even if you don't know what to do, we've heard the term diversify, but if you don't know what that is, you can always just go in and see everyone over at Ringgold and Associates for the free consultation. Thank you so much.
We'll do it in plain English.
Oh, I love that idea. All right, you can also get more information on our website, fox4morningblend.com. All right.